Why is dollar-yen higher?
Morning, Guy. Well, the bank, as you mentioned, the Bank of Japan Governor Ueda mentioned that the BOJ would raise its policy rate if the economy continues to improve, but he didn't outline an exact timing. But I would refer you back to his comments last month, where he said that, quote unquote, it will take a long time before the big picture is fully clear, both on the spring wage negotiations and the Trump administration policies. Those kind of comments suggest that the rate hike is more likely in March than this month, which is why we are seeing the yen getting hammered a bit today. And it'll get dragged lower in the remainder of the month as I see it. Look, make no mistake, the yen is extremely cheap, whether you look at the real effective exchange rate or any other yardstick, but it still needs a catalyst to push it higher. And mind you, by being long the yen, a portfolio is implicitly exposed to a negative carry of more than 4% annually against the dollar. And if the BOJ continues to drag its feet, and if it's tentative in its approach as to the timing, and if it goes at a glacial pace, where last year we just got 35 basis points of rate increases, if we see that kind of pace, it's just not going to do anything to the yen, which is why the yen is not picking up the cues, the hawkish cues, Guy.
And then let's go from the yen to the yuan, because you saw the PBOC reinforcing its yuan support. So what's your outlook for the yuan?
Well, the PBOC said the yuan fixing slightly stronger, which wasn't surprising coming after the currency's drop below 730 against the dollar last week. The message from the PBOC, Lizzy, is one that the policymakers aren't panicking and any weakness in the currency will be gradual. The gradual word is something they're very keen on. Even so, I think that there is a big risk that the PBOC will devalue the yuan at some point this year, like it did in August 2015, when it depreciated the currency by nearly 4% in 2 stages. And I think such a one-off devaluation will send ripples through the markets. And this is a scenario that the traders are underpricing, and it is distinctly a warning for 2025.
Ben, talk to us a little bit about that 2025 story. How much of what the PBOC, the BOJ does ultimately comes down to the Federal Reserve?
Well, we heard over the weekend from the Fed speakers that the inflation job isn't done. So it's not a surprise that the markets are pricing in just less than 2 rate cuts by the end of the year. In September, it was as though the Fed was challenging the markets to prove why it shouldn't cut rates. But now it is asking why it should continue cutting rates in an environment where the core PCE is closer to 3% than to 2%. So, which is why we have seen Treasury yields are surging higher as we speak.